Hey traders, it is Thursday, April 12th. Doing something a little different here for YouTube. Just going to post a recap on our last three posts and more or less forecasts on the market, more or less April 10th, 11th, and 12th. Today is the 12th, so these are very active, very recent. All of them are coming to fruition, unfolding just as we expected. And let's just run through them real quick. Starting off April 10th, we talked about crude oil poised to break out. I had an interview here with Jim Godart of Howie Street, and you can listen to the podcast here where we talk about various things other than just crude oil. But crude oil was the main mover to break out. I was having ramming speed up to resistance, and let me just go to the daily chart and give you a quick visual. More or less, we had our cycle analysis putting in a bottom here. It was a Fibonacci measured move. It was through high volume support, pretty much tagged that level, reversed off it, and we've seen it just muscle all the way up to multi-month highs. Actually, might be multi-year highs here. Anyways, today a little bit of a pullback, but in the grand scheme of things, going to the monthly chart, you can see this huge uh, bear market that took place in crude oil. It's been basing for the last 1, 2, 3 years, depending what you consider a breakout in this stage one bull market. Either way, crude oil has broken out, whether you consider this a breakout of a bull market or above this high. It's been oscillating, flirting with this very significant standout high. To me, this level, the 62 level, being broken and holding above there is a significant level, and it's been consolidating in this 3-month bull flag. And the next upside target is going to be around $77.50, $78, which is where crude oil really picked up speed to the downside, and it's fairly significant areas where prices traded, tagged again, and then broke down below. So that's what we're looking for crude oil, and it's on a run here. I think a big mover, I think a big catalyst for this could be war, but also the U.S. dollar index, which is very bearish and on its way lower, which will trigger a commodities rally. So taking a look at our next chart article that we posted, the next one was we talked about the rise of a new bull market. Well, crude oil is starting that, but the rise of the new bull market is going to be commodities in general. Might be hard to see this chart if I can zoom in a little bit. This is the DJP ETF. More or less, it's just a basket of commodities, and it kind of mimics the commodity index. If you look at our purple lines on here, it looks a little squiggly, but more or less, we've got significant cycles bottoming out here. This is the weekly chart. Over the next couple weeks, we should see commodities more or less put in a significant probably hold up in value at this point, but a significant low. We could see a very big run in commodities in general. And commodities tend to run near the end of a bull market in equities. And that is what we are getting at. This year is going to be the rise of commodities while equities start to become highly volatile. You're going to have to start picking sectors to trade because the markets aren't going to just all be going up. There's going to be hot pockets and underperformers, and commodities are going to be in that new bull market phase, at least for a few months. Once they break out and start to run, we'll see commodities outperform equities going forward. But when the bear market in equities does kick in, we will see commodities sell off and crash as well. Pretty much when we get into a bear market, everything starts to fall, commodities and stocks. But until then, commodities firming up, multi-year base, everything is set here for a significant rally in commodities in general. So let's just take a look at the DJP ETF. Here it is. This is the monthly chart. We can just zoom in a little bit. More or less nice, big multi-year basing formation. It's got this beautiful pattern that once it can break and start to run here, more or less it's still in a neutral stage one basing zone. But if it starts to close more or less above this 25 level, I think it's off to the races, and we could see this unfold up into the 28, 29, maybe even 30 area pushing forward, going forward. So there's some good upside potential in this kind of big basket, kind of a slow mover fund that mimics the index, the commodity index somewhat. Now let's go back and take a look at the next chart here. So our most recent post today, or yesterday, whenever you're watching this, April 12th here, we're talking about the XPX resistance may prompt a massive short squeeze. Wrote this in the morning, try to get it posted as quick as we could because you can see the market wanting to pop and start to run this morning. And more or less, taking a look at the charts, this is a 60-minute chart of the SPY ETF. You can see this bottoming formation. You can argue it's a rounding formation. Maybe you see a head and shoulders. It's a stage one basing formation. It doesn't matter what time frame you're on. If you know Stan Weinstein's stage analysis, you can have these stages on any time frame from 1 minute all the way up to whatever you want. So here we've got this mini basing formation over the last couple of weeks. SP 500, we have cycles bottoming out last night, showing that we should have another big push higher. If it can break above this yellow line, we going to probably see some big short covering. A lot of people are short the markets, anticipating a sharp drop back down to these lows or much lower. So they will be caught offside, forced to cover their shorts and buy. Plus, they'll probably want to get long and add even more buying pressure because we do have potential here for a very quick pop and rally in the broad market. And the SPY has got a beautiful pattern for that. Looking at another chart, this is the daily chart of the SPY. Looks a little messier to the to those who don't know TA, technical analysis, but more or less this is a very nice pattern, especially when you look at it intraday. You can see the price swings. A lot of people get worried about this choppiness and uncertainty, and that's why the volatility index is still relatively high in terms of where we have been recently in the past few months. But looking here again at this is the 240-minute chart, really nice bottoming formation. Everything's starting to show signs that we should pop and break out, and the market is we've popped above this level today. We're having a significant run in equities, and probably going to see a continued strength into the close with short covering, and tomorrow probably follow through short covering for people who aren't able to get to their computers to get out of their shorts today. So that's where we are in the grand scheme of things. Let's just pull up the SPY ETF real quick. And we'll pull up the 240-minute chart. You can see where we are. We are trading right at this resistance area. We're having a nice pop in price. It's tagged that level. If the market holds up into the close or closes is about to close above this level, I think we're going to see a huge short squeeze today at the close, or it'll be tomorrow. Either way, very close here to a massive pop in the equities market going forward. Anyways, just wanted to kind of share the last three posts. Sometimes it's easier just to watch a quick video than to read 3 articles and try to analyze the charts. Take care. Bye-bye. Hey guys, don't forget to subscribe to our channel by clicking this button, and also make sure you watch the next video, which shows you the next major cycle in the stock market and commodities that's going to go forward. It's life-changing, and you want to make sure you're on the right side, or else you could lose a decade of your money making money. So take a look, and thanks for subscribing.